In the tapestry of technological advancements, few innovations have captivated the world like Bitcoin. Its emergence marked a paradigm shift, challenging traditional financial systems and igniting a revolution in digital currency. From its humble beginnings to its current status as a global phenomenon, Bitcoin's journey is a testament to the transformative power of ideas. Born in the depths of the internet, Bitcoin emerged as a decentralized and secure means of exchange. Free from the control of governments and financial institutions, it promised a new era of financial freedom and transparency. Its underlying technology, blockchain, has inspired countless innovations, disrupting industries far beyond finance. This essay will delve into the captivating history of Bitcoin, tracing its evolution from its genesis to its current standing as a global force. We will explore the key milestones, the challenges overcome, and the profound impact it has had on the world. Prepare to embark on a journey through the rise of Bitcoin, from its obscure origins to its current position at the forefront of the digital revolution. To fully grasp the magnitude of Bitcoin's impact, we must first journey back in time, exploring the events and innovations that paved the way for its creation. Like any groundbreaking invention, Bitcoin did not emerge in a vacuum, but rather stood on the shoulders of giants. Our exploration will begin in the pre-Bitcoin era, where early pioneers first envisioned the concept of digital cash. We will delve into the works of visionaries like David Chaum and Wei Dai, whose groundbreaking ideas laid the foundation for a decentralized financial system. From there, we will trace the timeline of Bitcoin's development, marking each pivotal step in its journey. We will witness its birth, its early struggles, and its eventual rise to prominence. Through a chronological examination of key events, we will gain a comprehensive understanding of the forces that shaped Bitcoin into the global phenomenon it is today. The year was 2008. The world was reeling from a financial crisis, shaking the very foundations of the traditional financial system. It was against this backdrop of uncertainty and distrust that Bitcoin emerged, a beacon of hope in a sea of turmoil. Our journey begins with the enigmatic figure of Satoshi Nakamoto, the pseudonymous creator of Bitcoin. To this day, their true identity remains a mystery, adding to the allure and intrigue surrounding Bitcoin's origins. In October 2008, Nakamoto published the Bitcoin White Paper, a revolutionary document that outlined a vision for a decentralized digital currency. This white paper, a masterpiece of cryptography and economic theory, would become the founding document of the Bitcoin revolution. Shortly after the release of the white paper, the world witnessed the birth of Bitcoin with the mining of the Genesis block. This event, occurring on January 3rd, 2009, marked the beginning of Bitcoin's journey into the annals of history. The journey to Bitcoin began long before its first block was mined. The desire for a digital form of currency, free from the limitations and control of traditional financial institutions, had been brewing for years. Early pioneers recognized the transformative potential of digital cash in an increasingly digital world. One such visionary was David Chaum, an American cryptographer who in 1983 introduced the concept of blind signatures. This groundbreaking cryptographic technique allowed for transactions to be verified without revealing the identity of the parties involved, laying the foundation for anonymous digital cash systems. Chaum's work led to the creation of DigiCash, one of the first digital cash systems. While DigiCash ultimately failed to gain widespread adoption, it demonstrated the feasibility of digital currency and inspired further innovation in the field. The quest for digital cash was driven by a desire for greater financial privacy, security, and efficiency. Traditional financial systems, with their centralized control and vulnerability to fraud, were seen as increasingly inadequate in the digital age. Central to the development of Bitcoin and other cryptocurrencies is the field of cryptography, the practice and study of secure communication in the presence of adversaries. Cryptography provides the tools and techniques necessary to secure transactions, protect user privacy, and ensure the integrity of the digital currency system. Early digital cash proponents recognized the importance of cryptography in creating a secure and anonymous form of electronic money. They understood that transactions needed to be tamper-proof, users needed to be able to transact privately, and the currency itself needed to be resistant to counterfeiting. The development of public key cryptography, a system that uses pairs of keys, a public key and a private key, was a major breakthrough in this regard. This system allowed for the creation of digital signatures, which could verify the authenticity of a transaction without revealing the sender's private key. These cryptographic innovations laid the groundwork for the creation of decentralized digital currencies like Bitcoin. They provided the necessary tools to ensure the security and integrity of transactions, protect user privacy, and create a trustless system where parties could transact directly without the need for intermediaries. In the late 1990s, the concept of digital cash took a significant leap forward with Wei Dai's proposal for B-money. Dai, a computer engineer with a strong interest in cryptography and privacy, envisioned a decentralized digital currency system that would eliminate the need for a central authority. B-money, while never fully implemented, introduced several key concepts that would later become fundamental to Bitcoin. It proposed a distributed ledger system, where transactions would be recorded on multiple computers instead of a central server, making it resistant to censorship and manipulation. Dai's proposal also explored the use of proof of work, a mechanism where users would expend computational power to solve complex mathematical problems in order to add new transactions to the ledger. This concept would later evolve into Bitcoin's mining process. While B-money itself did not come to fruition, its innovative ideas, particularly its emphasis on decentralization and cryptographic security, had a profound influence on the development of Bitcoin. It served as a crucial stepping stone, moving the world closer to the realization of a truly decentralized digital currency. As the global financial crisis of 2008 gripped the world, an anonymous individual, or perhaps a group under the pseudonym Satoshi Nakamoto, stepped onto the world stage. The true identity of Satoshi Nakamoto remains a mystery, adding intrigue to the origins of Bitcoin. Despite the anonymity, Bitcoin captured the world's attention. Satoshi ensured Bitcoin would be judged on its own merits, a testament to the power of cryptography and decentralization. Bitcoin, a peer-to-peer electronic cash system. On October 31, 2008, a research paper titled Bitcoin, a peer-to-peer electronic cash system appeared. Authored by the enigmatic Satoshi Nakamoto, the paper laid out a revolutionary vision for a decentralized digital currency system. The Bitcoin white paper was a masterpiece of concision and clarity. At the heart of Bitcoin's design was the concept of a blockchain, a public, immutable ledger. The white paper also introduced the concept of mining, where powerful computers solve complex problems. Genesis, the dawn of a new era. Just a few months after the Bitcoin white paper, the Genesis block, or Block Zero, was created. On January 3, 2009, Satoshi Nakamoto mined this inaugural block. It was a declaration of independence from the traditional financial system. Embedded within the block's data was a message, The Times 03, Jan 2009, Chancellor on brink of second bailout for banks, a nod to the global financial crisis highlighting Bitcoin's purpose. The Genesis block marked Bitcoin's journey from concept to network. Early adopters began experimenting with this novel digital cash. Laying the foundation. In the early days following the creation of the Genesis block, The Bitcoin network was a small and tight-knit community, primarily comprised of cryptography enthusiasts and early adopters. These pioneers believed in decentralization and a transparent financial system. The early days of Bitcoin were characterized by experimentation and collaboration. Developers worked tirelessly to improve the Bitcoin protocol, addressing technical challenges and laying the foundation for future growth. Discussions about Bitcoin's potential took place on online forums, fostering a sense of community and shared purpose. One key milestone was the first ever Bitcoin transaction on January 12, 2009, just 9 days after the Genesis block was mined. Satoshi Nakamoto sent 10 Bitcoins to Hal Finney, marking the first time Bitcoins were transferred between two individuals. This transaction demonstrated Bitcoin's potential as a peer-to-peer electronic cash system. It allowed for direct transactions without intermediaries, a glimpse into the transformative potential of Bitcoin. The Bitcoin network hummed with quiet anticipation. The Genesis block had been mined, but the true test lay in its functionality. On January 12, 2009, a pivotal step in Bitcoin's journey occurred. Satoshi Nakamoto sent 10 Bitcoins to Hal Finney, marking the first ever Bitcoin transaction. This transaction signified the first time Bitcoins were transferred between two individuals. It was a symbolic gesture, demonstrating trust and collaboration in the early Bitcoin community. In the early days of Bitcoin, its value was speculative. With limited supply and a nascent user base, a Bitcoin exchange rate seemed distant. As the community grew, a rudimentary market began to form. Enthusiasts traded Bitcoins online, often using barter-like systems. These early transactions were crucial in establishing a Bitcoin market. As Bitcoin gained traction, more sophisticated trading platforms emerged. The establishment of a Bitcoin exchange rate marked a significant milestone. May 22, 2010 would forever be etched in Bitcoin lore as the day a programmer named Laszlo Hanyecz made history by purchasing 2 pizzas for 10,000 Bitcoins. Hanyecz, an early Bitcoin enthusiast, posted on a Bitcoin forum offering 10,000 Bitcoins for 2 pizzas. A fellow Bitcoin user in London accepted the deal, ordering 2 pizzas from Papa John's. At the time, 10,000 Bitcoins were worth $41. This transaction, now known as Bitcoin Pizza Day, symbolizes Bitcoin's early potential and unpredictable value. The early adopters of Bitcoin were a diverse group, united by a shared belief in the transformative potential of decentralized technologies. They were drawn to Bitcoin's promise of financial freedom and its resistance to censorship. Among them were cryptography enthusiasts, libertarians, and those who saw Bitcoin as a global currency. They recognized the power of the blockchain and Bitcoin's potential to revolutionize finance. This early wave of adoption laid the foundation for Bitcoin's growth. As Bitcoin gained traction, the need for a dedicated platform became apparent. In July 2010, Mt. Gox emerged, founded by Jed McCaleb. Initially an exchange for trading cards, it quickly pivoted to Bitcoin. Mt. Gox handled over 70% of all Bitcoin transactions at its peak. However, technical issues, security breaches, and mismanagement plagued the exchange. In 2014, a catastrophic hack led to the loss of hundreds of thousands of Bitcoins. Mt. Gox's collapse highlighted the need for better security in the Bitcoin ecosystem. In the early days, Bitcoin's value fluctuated wildly. In November 2010, Bitcoin's market capitalization surpassed $1 million. This milestone signaled growing recognition of Bitcoin's potential. Despite volatility, Bitcoin's market capitalization continued to climb. Bitcoin's journey from the fringes of the internet to the global financial stage was well underway. February 9, 2011 marked a pivotal moment as Bitcoin achieved parity with the US dollar. This milestone legitimized Bitcoin, signaling its growing acceptance. It attracted new investors and speculators drawn to potential profits. Reaching parity bolstered Bitcoin's credibility and paved the way for its expansion. Bitcoin transitioned from a niche digital currency to a global phenomenon. As Bitcoin's popularity grew, so did its ecosystem. Entrepreneurs and developers built businesses and applications on the Bitcoin network. Online forums and communities flourished, fostering early adoption. Bitcoin mining pools emerged, increasing network security and stability. This early wave of adoption laid the foundation for Bitcoin's emergence as a global phenomenon. Bitcoin's early years were marked by rapid growth and challenges. Security emerged as a pressing concern, with hackers targeting exchanges and wallets. Early security breaches highlighted the need for robust security measures. Market volatility, characterized by wild price swings, tested early adopters. Despite these challenges, Bitcoin's overall trend remained upward. One of Bitcoin's most distinctive features is its finite supply. Bitcoin has a fixed limit of 21 million coins. To control new Bitcoin creation, the protocol incorporates a halving mechanism. Every 4 years, the reward for miners is cut in half. The first halving occurred in November 2012. Halvings often lead to increased demand and price appreciation. The year 2013 was pivotal for Bitcoin. In April, Bitcoin's price surged past $100. This rise was fueled by media coverage and investor interest. However, the price crashed days later, highlighting Bitcoin's volatility. Despite setbacks, Bitcoin's price rebounded, reaching over $1,100 in December. This surge was driven by demand from China and new Bitcoin businesses. The year 2014 brought a significant event in Bitcoin's history. In February, Mt. Gox filed for bankruptcy after losing hundreds of thousands of Bitcoins. The collapse eroded trust in the industry and highlighted security vulnerabilities. The investigation revealed security lapses and mismanagement. The Mt. Gox collapse marked a turning point for Bitcoin security. It led to the development of multi-signature wallets and cold storage solutions. The industry implemented more robust security measures to protect user funds. The challenges faced by Bitcoin ultimately strengthened the network. Each setback spurred innovation and led to more secure systems. The Mt. Gox collapse underscored the importance of decentralization and security. The Bitcoin network continued to operate as designed, proving its resilience. Early adopters were joined by new users attracted by Bitcoin's mainstream acceptance. Bitcoin's journey from a niche experiment to a global phenomenon continued. The Silk Road Bitcoin's trial by fire. As Bitcoin gained notoriety, it attracted regulators and law enforcement due to its implications for illicit activities. The Silk Road, an online black market, operated from 2011 to 2013, using Bitcoin for anonymous transactions. In October 2013, the FBI shut down Silk Road, arresting its founder, Ross William Ulbricht. The FBI seized approximately 144,000 Bitcoins, marking a significant event in Bitcoin's history. The aftermath of Mt. Gox regulatory scrutiny intensifies. The collapse of Mt. Gox in 2014 fueled regulatory concerns about Bitcoin and other cryptocurrencies. The loss of Bitcoins and lack of oversight prompted calls for greater scrutiny of the cryptocurrency industry. Governments and regulatory agencies recognized the need to address potential risks, including money laundering and consumer protection. The Mt. Gox debacle served as a catalyst for regulatory action, prompting inquiries and proposals for greater transparency. Amidst the regulatory uncertainty and scrutiny that followed the Silk Road and Mt. Gox incidents, a new breed of cryptocurrency companies emerged, seeking to build trust and legitimacy by embracing regulation and compliance. One such company, Coinbase, founded in 2012, would play a pivotal role in paving the way for mainstream adoption of Bitcoin by pioneering a regulated approach to the cryptocurrency industry. Coinbase's founders Brian Armstrong and Fred Ehrsam recognized that regulatory clarity and consumer protection were essential for Bitcoin to gain widespread adoption. They sought to build a cryptocurrency company that operated within the existing financial system, complying with relevant regulations and working constructively with regulators. In January 2015, Coinbase became the first regulated Bitcoin exchange in the United States, obtaining a BIT license from the New York State Department of Financial Services. This landmark achievement demonstrated that it was possible to operate a cryptocurrency exchange within the existing regulatory framework, a significant step towards mainstream acceptance. Coinbase's commitment to compliance and its willingness to work with regulators set a new standard for the industry, paving the way for other reputable cryptocurrency companies to emerge and legitimizing the space in the eyes of institutional investors and the general public. As Bitcoin and other cryptocurrencies gained global traction, the regulatory landscape evolved into a complex and often fragmented patchwork of laws, guidelines, and interpretations. Different countries adopted varying approaches, ranging from embracing innovation to imposing strict controls, reflecting the diverse perspectives on the potential risks and benefits of this emerging technology. This lack of regulatory uniformity created challenges for businesses operating in the cryptocurrency space, particularly those with a global presence. Navigating this complex web of regulations required significant legal expertise, compliance resources, and a deep understanding of the evolving regulatory landscape in each jurisdiction. Some countries like Switzerland and Malta positioned themselves as crypto-friendly jurisdictions, seeking to attract cryptocurrency businesses with favorable regulations and a supportive ecosystem. Others, like India and Turkey, remained more cautious, expressing concerns about financial stability, consumer protection, and the potential for illicit use. This global regulatory fragmentation also posed challenges for international cooperation and enforcement efforts. Cryptocurrencies, by their nature, transcend national borders, making it difficult for individual countries to effectively regulate and police activities that may originate or have implications beyond their jurisdiction. The regulatory journey of Bitcoin and the broader cryptocurrency industry has been a delicate balancing act, seeking to foster innovation while mitigating risks and protecting consumers. Regulators aim to prevent illicit activities and protect investors without stifling growth and innovation. Striking a balance between new technologies and financial stability is key. The industry is constantly evolving, requiring a flexible approach. International cooperation is essential due to the global nature of cryptocurrencies. The halving effect, amplifying scarcity, attracting investors. As Bitcoin matured, it attracted institutional investors, hedge funds, and large financial players. The halving event highlighted Bitcoin's potential as a store of value and an inflation hedge. Halving events reduce the rate at which new Bitcoins are created, halving the reward for miners. This creates a scarcity dynamic, differentiating it from traditional fiat currencies. Institutional investors recognize the significance of Bitcoin's halving events. Decreasing supply and growing demand could lead to significant price appreciation. Wall Street's cautious dance with Bitcoin institutional interest in Bitcoin grew, leading to a desire for regulated investment vehicles. The exchange-traded fund, ETF, emerged as a potential gateway for mainstream investors. A Bitcoin ETF would allow investors to buy and sell shares on traditional stock exchanges. However, regulatory hurdles and concerns about market manipulation persisted. The SEC repeatedly rejected proposals, citing volatility and lack of transparency. Despite setbacks, the pursuit of a Bitcoin ETF continued, driven by the belief in its potential. Bitcoin forks, divergent visions, competing paths. As Bitcoin gained traction and its user base expanded, so too did the debates about its technical roadmap and its future direction. These debates often centered around fundamental questions about Bitcoin's scalability, transaction fees, and its role as a medium of exchange versus a store of value. These disagreements, reflecting the decentralized and open-source nature of Bitcoin, sometimes led to forks in the blockchain, creating new cryptocurrencies with different rules and features. A fork occurs when a group of developers, miners, and users decide to split from the original Bitcoin blockchain and create a new version of the software with modified rules. One of the most notable Bitcoin forks occurred in August 2017, resulting in the creation of Bitcoin Cash, BCH. Proponents of Bitcoin Cash argued that the original Bitcoin had become too slow and expensive for everyday transactions, advocating for larger block sizes to increase transaction throughput and reduce fees. These forks, while sometimes disruptive, also highlighted the dynamism and adaptability of the cryptocurrency ecosystem. They demonstrated the ability of communities to come together and experiment with new ideas, driving innovation and pushing the boundaries of what was possible with blockchain technology. Institutional adoption, a gradual embrace of digital gold. Institutional interest in Bitcoin grew despite regulatory hurdles and price volatility. Large financial institutions began to explore Bitcoin's potential as a digital store of value. Increased liquidity and regulated custody solutions addressed concerns about volatility and security. Bitcoin's potential as a hedge against inflation also played a role. Bitcoin was gradually gaining acceptance within traditional financial institutions. A price surge heard around the world. In 2017, Bitcoin transitioned from niche technology to global phenomenon, capturing headlines worldwide. Its value skyrocketed, breaking all-time highs and attracting new investors. Media outlets fueled the frenzy with daily updates and analysis. Conversations everywhere touched upon Bitcoin, reflecting its growing presence. Wall Street takes notice. The dawn of Bitcoin futures. As Bitcoin's price soared, traditional financial institutions could no longer dismiss it. Wall Street began to recognize the potential for profits and the need to adapt. In December 2017, CME and CBOE launched Bitcoin futures contracts. These contracts allowed institutional investors to speculate on Bitcoin without directly owning it. The launch marked a significant step towards mainstream acceptance and regulatory oversight. While Wall Street's embrace of Bitcoin futures signaled growing institutional interest, a watershed moment for mainstream adoption arrived in October 2020, when PayPal announced it would allow users to buy, sell, and hold Bitcoin. This move provided millions with easy access to cryptocurrencies, lending credibility and legitimacy to Bitcoin. PayPal's decision prompted other institutions to explore cryptocurrency integration. As Bitcoin gained mainstream recognition, it began to permeate popular culture, appearing in unexpected places and becoming a topic of conversation in diverse circles. This growing cultural presence, from television shows and movies to music and sports, normalized Bitcoin and cryptocurrencies. Bitcoin found its way into popular television shows, often used humorously to illustrate its volatile nature. Movies like Banking on Bitcoin and Trust Machine brought the technology to the big screen, raising awareness. Musicians and artists began to accept Bitcoin as payment, signaling its growing acceptance within creative industries. Bitcoin's journey from obscurity to global phenomenon showcases the power of ideas and financial innovation. Despite volatility and regulatory challenges, Bitcoin remains the leading digital currency, captivating investors and everyday people. Its decentralized nature offers autonomy and freedom, appealing in times of financial instability. With a fixed supply of 21 million coins, Bitcoin hedges against inflation. Bitcoin's blockchain technology has inspired new applications and business models. Bitcoin has changed how we think about money, shaping the future of finance and innovation. As Bitcoin entered the year 2023, it carried a narrative of innovation, volatility, and evolution. The SEC's approval of the first spot Bitcoin ETF by BlackRock marked a pivotal moment. This landmark decision symbolized regulatory acceptance and opened doors for institutional investors. The ETF's listing bridged the gap between traditional finance and cryptocurrency. The approval of the first spot Bitcoin ETF marked a shift towards a more mature approach to regulation. Regulators intensified efforts to establish clear guidelines and protect investors. The collapse of the Terra ecosystem and the FTX implosion highlighted the risks of unregulated markets. Lawmakers focused on AML, CFT compliance, and market manipulation. The FATF issued updated guidance on virtual assets. The industry began to embrace self-regulation and compliance for long-term sustainability. As Bitcoin's journey continues to unfold, it is becoming increasingly clear that its legacy will extend far beyond its initial conception as a peer-to-peer electronic cash system. While its use as a medium of exchange continues to grow, Bitcoin's impact has transcended its transactional value, sparking a technological revolution that has the potential to reshape industries and redefine the way we think about money, trust, and the nature of value itself. Bitcoin's underlying technology, the blockchain, has emerged as a powerful force for innovation, inspiring the development of new applications and business models across a wide range of sectors. From supply chain management and digital identity to healthcare records and voting systems, the potential applications of blockchain technology are vast and still being explored. Moreover, Bitcoin has ignited a global conversation about the future of money and the role of traditional financial institutions in a rapidly changing world. Its decentralized nature, operating independently of governments and central banks, has challenged the established financial order, prompting a reassessment of the very foundations upon which our financial systems are built. Bitcoin's journey is far from over, and its ultimate destination remains uncertain.